earlier this month for its proposed acquisition of Access Kenya. The offer closes on the 23rd of next month. While Dimension Data waits for that deal to close, we've also had a shake-up in South Africa with the appointment of a new communications minister. And there's also talk in the market that Dimension Data itself, which is owned by Japan's Nippon Telegraph and Telephone, is considering relisting on the Johannesburg Stock Exchange at some time in future. Well, here to give us insights into all of that is Derek Wilcox. He's the CEO of Didata for Africa, Southern Africa, Middle East. Derek, good to have you here on the program, particularly as you're such an old-timer with the DD Group. When you started at Internet Solutions, I was watching an interview that Bronwyn Nielsen did with you on CNBC Africa. You were employee number 12.
That's right, Alec.
And look at you now. How many people do you have in your group?
The group is about 21,000 people globally now. The Middle East and Africa is about 7,500 people.
And you're getting aggressive in Africa. The Access Kenya transaction, which will close next month, is there any fear that it might not go through?
Well, there is a chance that we don't get the necessary shareholder uptake, but I think that's quite a small chance. The feedback we're getting anecdotally from a number of the larger shareholders is that they are positive about the offer. The independent report which has come out, which the board of directors of Access Kenya have used as the basis to recommend to their shareholders that they accept our offer, shows that it is in fact more than fair value for the company.
So there's no problem, there's no antagonists in the near the Nairobi Securities Exchange who are saying refuse this or ask for more. You did come out with a pretty good premium initially.
Well, Kenya has a very free press. And there's no doubt that there have been a few individuals who've said that they feel the offer's too low. The basis for that largely seems to be the fact that Access Kenya did trade at a higher price a few years ago. And they feel that they bought in at a time and now they're being forced to take a loss. However, I think you've got to look at the fair value of the asset in today's market. And a lot of your smaller telecommunications companies across the Middle East and Africa have battled in this market. And I think that this represents very fair value to the shareholders today.
Didata is getting a lot more acquisitive, a lot more aggressive. It seemed it took a couple of years for the Japanese acquisition to settle things down. Is that the correct reading? Are you now looking to expand again?
We are looking to expand. We have NTT's backing and mandate to do that. NTT themselves would like to double their business outside of Japan in the next 5 years. And they want to do that in part, at least, through acquisitions. So they are encouraging us to look for opportunities to make acquisitions in order to get to scale in geographies where we don't have scale at this point in time, and also to get into new technologies, things like cloud computing and mobility.
Where are your gaps on the continent?
On this continent, I think we're pretty well covered. I suppose one market that we'd still like to be in future would be Egypt. But I think with the current political situation in Egypt, it's probably not one we'll look at in the near term. I think our biggest challenge across the Middle East and Africa is that there's several markets where I feel we could still be substantially bigger. So if you look at our operations in Kenya, which I think is a very attractive market because it's a hub for East Africa, and in Nigeria, there's no doubt in my mind that we could be substantially bigger in those markets.
So it would be a similar play, although you do have operations on the ground, bolt-on acquisitions in those geographies.
Across all of our brands in both East and West Africa, we have about 300 people, to give you a feel for it. And I think critical mass is maybe getting closer to 1,000 people in each of those geographies. So we would like to go and do some of that organic, and by winning deals with clients, and then some of that through acquisitions.
How much time do you spend in those two areas?
Not much. I actually visit each of them about once a year. We make extensive use of video conferencing technologies. We're obviously trying to cut our costs in the current environment as well. And I must say I found video conferencing to be a very successful technology. It's one we sell, so we also try and encourage our clients to use it. And it's just amazing. The technologies come on in leaps and bounds. I've just actually come through a round in the last couple of weeks of interactive sessions with our staff in both of those markets, just chatting to them, getting feedback from them via a video conference. And what wouldn't have been possible a few years ago is not only possible, but very accessible today.
Of course, the rest of us use Skype. But you're talking about an up end or top end of the market.
Correct. Although I suppose not that dissimilar from Skype. I think Skype just doesn't scale when you're dealing with a lot of people in different rooms, etc., across the continent. But we also use Skype internally, by the way, Alec. I think it's a fantastic technology.
Derek, coming back to South Africa, we have a new communications minister, Eunice Karim. The first local tech leader or technology leader to have a comment on him was Alan Knott-Craig, who's very bullish. How do you view it?
I think it's very positive. I think he's somewhat of an unknown in this particular sector, but I think if you look at his track record, there's no doubt that he's somebody who looks at the facts, listens to what the people have to say, and then comes out with some quick and decisive action. And I think that's what we need in the telecommunications industry.
But you haven't been well served.
Well, I think the previous ministers have no doubt had their own challenges and problems at a sort of macro-political landscape, but there's no doubt that decisions have been taking too long in our industry. And I think that that's something that we're really looking to the new minister to move along a little bit more quickly.
What kind of regulations would you like to see at the top of his list of priorities?
Well, I think the first thing that needs to be addressed is the allocation of spectrum. I think it's very important how spectrum gets allocated. You know, we see it operating in a market like Kenya versus a market like South Africa. And I think South Africans like to think of ourselves as being the sort of tech leader on the African continent. But I think we really are slipping behind in a number of key areas. So broadband in the Kenyan market is a lot more readily available and a lot cheaper than it is here. So we're not even comparing ourselves to the United States or to Western Europe. We are slipping behind on the African continent. And I think the allocation of spectrum is absolutely critical to resolving that. And also the future market model as far as spectrum is concerned. Our group would like to see more of an open access approach to telecommunications infrastructure and spectrum. So by that we mean that we'd like to see somebody as a wholesaler own that facility, build out that facility, and then make it available as a retail offering into the market through a variety of service providers. We'd obviously like to be one of those.
So the unintended consequences of South African regulations has been that the country has slipped behind other parts of the continent, and particularly East Africa. What have they got right over there that perhaps could be learnt from in the bottom end of the continent?
I think what you've seen in the Kenyan market in particular is a couple of different factors. First of all, you had a far quicker introduction of competition at the infrastructure level. So you saw a couple of years before South Africa saw infrastructure level competition, a number of competitors come into that market fully empowered. Secondly, you have seen that they have allocated the spectrum licenses far more quickly. Some would argue too quickly, because you're now seeing some of the new entrants that came into that market force prices down, showing that they don't really have sustainable business models, and maybe a little bit of restructuring needs to happen there as well. And I think in the third instance, you've also seen the Kenyan government being very proactive in the way in which they're using technology. And it's not that the South African government doesn't use technology, but when it comes to things like social media, if you look at the recent Kenyan elections, they had a program called Posho Piro. It was a very, very interesting program where they used the youth through social media to ensure the elections were peaceful. Whenever I go to Kenya, you open a newspaper, there's a full-page ad about a government function that you can contact to get advice about what seeds you should be planting. So I think they've really made that technology very directly relevant to the people on the ground. Of course, there's the famous M-Pesa story, not that that was government-led necessarily, but I think it has demonstrated that technology can take really first-world type applications and make them accessible to very rural, poor people. It's interesting, I saw this morning that Facebook have just announced Facebook for every phone. It's a very interesting technology to allow Facebook to be used on a feature phone, not a smartphone.
Derek, let's get back to Dimension Data itself. You've been with the group since the mid-90s. You've gone through the boom, 70 Rand a share, to bust under 2 Rand a share. There's a lot of talk in the market that you guys are readying yourself for a relisting. Is there any substance at all in that?
I suppose we'll never discount that, and I think our chairman, Jeremy Ord, has been on record as saying it is something that we would look at again in future. But at the moment, there are no immediate plans to relist.
Does NTT have any other subsidiaries around the world that are listed separately?
It does have subsidiaries that are listed, but not wholly owned subsidiaries.
Right.
We are a wholly owned subsidiary.
But you could become conceivably part of NTT's stake could conceivably be sold.
That's true.
To the public.
Could conceivably be sold. So NTT does have outside shareholders, either through a listing or simply through a private outside shareholder arrangement in a number of areas where it operates. In fact, if you look at their most famous asset, NTT Docomo, the mobile operator, they're the majority shareholder, but there are other shareholders in Docomo.
And the whole more aggressive approach towards acquisitions by Data at the moment, wherever it might be on the continent, is this something that we can see accelerate?
It's not only on the continent, so Dimension Data is looking to get bigger in some of the developed markets as well. So we are looking to reach scale in North America, Europe and Asia. We are looking at acquisitions in those geographies as well. In fact, I think that the bulk of our acquisition over the last 10 years has been in developing markets. So we have gone from being essentially in 0 countries on the African continent to 10 as the Didata brand, and if you look at all of our brands, it's in fact about 17 on the African continent. We've moved into South America, we've moved into large parts of Southeast Asia, smaller and maybe less successful moving into Eastern Europe. I think what we're seeing now is that we're at a phase where we feel we just have to be bigger and stronger in Western Europe, in North America, and I think we'll be looking at acquisitions in those geographies.